As passive income investors, you want to see your investment not only paying you dividends, but also they increase those dividends. And that's exactly what I'm going to show you from this ETF, which is HYLD. So here we can see HYLD the first time they did start paying was in March 10th, 2022. And that was only 13, if you round up, was 14 cents. And then they did pay 14 cents and they increased to pretty much 14. And it's been going, and then at one point they decrease, and I made a video about the decrease when they did this, and it came to 12 cents per share. They went to 13. So at one point they decrease, and then they increase again to 13, and last payment was about 14 cents. So they increased from what it was 13 cents. So now in this video today, I'm going to show you how you can use this income to generate about 5,000 a month. And before going that, I'm going to look at the little description about this fund. So if you're a new person, you gotta know what this is. And for an investor who is a US based subscribers, just make sure this is purely Canadian ETF. So you won't be able to buy this ETF unless you use Interactive Broker. So this is Hamilton Enhanced US Cover Call ETF. And then, by the way, there are two of them. There's HYLD and there's another version which is a US dollar. So if you're a Canadian investor who has USD, you can buy this one here. It's called HYLD.U. This is Canadian. They both trade on Toronto Stock Exchange, but the difference is HYLD is a Canadian currency, and then HYLD.U, this is American currency. So the yield right now is 13.11, yield of 13.11, which pays monthly. Portfolio of US equity cover call ETF with overall sector mix broadly similar to the S&P 500. Okay, available for purchase in Canadian hedged, which is HYLD, and US hedged HYLD. I've explained that. So are you a fit investor for this ETF? Yes, you are, if you meet these criteria. If you're looking for attractive monthly income, you look to diversify your portfolio to the portfolio of similar to the S&P 500, or you want a US exposure, and you want a higher yield, and also you want to enhance your growth for to generate more income. Of course, this ETF has some modest of 25% cash leverage. So fund objective, the fund seeks to provide attractive monthly income and long-term capital appreciation from diversified multi-sector portfolio of primarily cover call ETF, primarily focused on the US. If we look at the performance, we can see here right now the NAV or price is 1306, yield is 13.11. I mean, performance has since inception, near 1 year has returned about 20%, 0.95. And if we look at the year to date, which is as of this year 2024, has only returned about 11%, and if we look at 6 months, it's 15%. But since inception has returned only about 4%. So we can go to another, like here I can see on the finance section, we can see the range between 52-week range is between 11 and 55. So if you bought at 11 at one point where it was, I think at one point it was 11 right there in September 2022, and I think I bought some share right there. And then if you look at here, also it went down again, and then right now as it increased to 13. So what this tells you is that when the market is bad, sometimes this fund can go down, but also it shows you this fund also can recover. So which was in both cases here in October 10th 2022 it recovered, and then the last time also in October 2023 it went all the way down and it recovered again, so which is a good. Now if we look at that's performance on this chart. If we go back to our website, we can see this ETF allocation, right? It has all the mixtures. So these are 11 sectors, just as S&P 500, right? But the biggest portion of this one is technology, which is 29%, healthcare is 16%, consumer discretionary is 9%, financial is 12%, communication is 8.6%, industrial is 4%, consumer staples is 4%, energy is 5%, utility is only 2%, real estate is 2%, material is 4%, other is only 2%. So I'm not sure why there's technology 29% if it's an income oriented ETF, but we'll see. So if we look at the holdings now, guys, look at the holdings. There's a hmax, there's a qmax, there's lmax. These are all in-house ETFs. So this fund is what we call a fund of funds, meaning it's a fund that invest in other ETFs, and we can see all these ones are in a house ETF. There's HBND. This is a bond, so it has 2% bonds, and also this bond is from Hamilton too. I can show you here. You can see hmax, which is this one here. It's US equity yield maximizer, and we look at qmax, which is this one here, which is technology yield maximizer. We look at lmax. This is healthcare. fmax, that's this one here. fmax, this is a US financial maximizer. And hmax, this is energy. And what's the other one? hmax and emax. Emax is energy. So there's a emax and there's hmax. Hmax is a gold. So they have a broader, they pretty much change all their ETFs. They used to be different ones, but they changed. Now they have these in-house ETFs. So it's a pretty good, right? Because before they used to use other type of ETFs, so now they have all in-house ETF, which because they did this, I mean, it reduces the fees that they charge in this, and which I'm going to show you the fee. Inception date, this is the date that the fund start trading, was February 4th, 2022. Asset right now has a 543 million. It's a lot of money, guys. Like, that's a $500 million almost, right? 500, that's a $500 million. That's a lot of money. We look at the current annualized is 13.11. Distribution is monthly. Management fee right now is 0. But this 0 can be deceiving because you are not paying fee on the ETF itself. So you're not paying fee on HYLD. But guess what? You are paying indirectly, which are under these ones. You're paying these ETFs here. But on aggregate, should be about 0.65, give or take. But on ETF level, you're not paying any fee. So that's kind of good because, of course, they use it in a house. But I'm just saying you have to be careful about this 0. It's kind of deceiving, right? And then risk rating is medium. So that's all for HYLD. So before I show you the spreadsheet, how you can generate between 1,000 to 5,000 a month, just make sure, if you like this content, just make sure you subscribe. And then if you also see this has any value to you, just make sure you give me a like. Now let's go to our spreadsheet. We can see I only put like 13 months, which will give you the whole picture. 13 months on average, within 13 months has paid about 13 cents per share. Okay, that's per month, by the way. So that's how much they've paid, because remember there was a 12 cents and at one point it was a 13 cents and at another time they were 14 cents. So on aggregate, if you combine them together, you're gonna get 13 cents as an average. And within 12 months period, they've only paid $1.63. So if you put this one to the price, now you're getting about almost even to the price. And the performance, of course, includes this distribution that you've received. So we get our 13 cents. That's how much you're getting. So how much that is in relation to the price of today, which is $13.02. That will give us a 12% yield as of now. Remember, on the website it says 11 point something, but of course, as of today, because it went down a little bit, so now we have 12% as of today. So if you buy it today, you're gonna get 12% annualized return or yield. So now, how much you're gonna get using this price? If you getting 12%, how much you need to invest to generate enough money for you to retire or to live comfortably? Now, I put differently because people have different money, different servings. So now if you have $5,000, right, you're gonna get only $250 a month. As you can see, it progresses. I progress about 25,000 on each up to 100,000. So from 25 to 100,000, you're gonna get from 250 to 749 a month. So 750 almost round up, and that will give you about 8,986 per year. That's not gonna be enough money to outright retire, but I mean, it's something that if we want 100, you're gonna give 11,982. It's not money to retire, but it's a money you can add to your income if you are a person who has other incomes, right? Of course, you can also diversify your portfolio, not only 100 maybe from this ETF, and then another, if you have that kind of cash, you can diversify that to put on this one, for example, and then other money to put on the other ETFs. But if we go up on the ladder of savings, so let's jump all the way to 200,000. How much that will give you? Will give about 2,000 a month, and that will give 23,000 a month. I mean a year, right? And then if you go 250, it's a quarter million. It's gonna give you 2,500 a month, and that will give you about 30,000 annually. We go to 300,000, that will give you almost 3,000 a year. I mean a month, and that will give you 35,000. Almost 36,000 a year, right? So 36,000 is the money that, if you live in a very small town and you maybe pay a house, is the money that you can work with. But for most people who still paying rent and or mortgages, of course 35 is not going to be enough in Canada, because the houses are very expensive. Now if you want to go, let's skip from 300 all the way to 400, that will give you 47,000, about 48,000. And if you want to make it over 50,000, 60,000, which is sounding, it's a money that for most people can maybe retire with, you have to put 500,000, and that will give you 5,000 a month. And about a round up to 4,992, so round up to almost 5,000, because it depends on what time you're buying this ETF, right? Because your yield will fluctuate from there, and that will give you 60,000 annually. So now we are talking about big money. So if you have 60,000, that you can retire for sure. So now that's all, guys. That's all I have today. So what if you don't want a HYLD and you want to invest in, for example, this other ETF right here, hdiv, because hdiv, we've seen it has done well, actually. It has outperformed the market. So what if you, instead of doing HYLD, you want to do hdiv? That's a video for another day I'm going to make, so just make sure you subscribe so you don't miss that. Again, if you like this content, give me a like. Till we meet again next video. Bye bye.